the extent of slowdown in the retail sales might be sharper than expected. I think the trend is there. Just the number is worse than expected. And given all these outbreaks in Fujian, I think the numbers will inevitably to be weaker as well, entering into the next 2 months. So I would say that China's slowdown, it seems to be inevitable, despite all these like increasing number of the PBOC measures and government stimulus measures.
And so where does that leave monetary policy PBOC-wise for now? When do you expect to see any kind of telegraphed update?
I think that the market is expecting more easing for sure, but I think the next policy window should be somewhere in early December, right before the Central Economic Conference. And before that, we shouldn't expect too much of the easing. At the moment, I think that what PBOC is doing, try to keep the market interest rate at the range bound. So in other words, there's no broader easing. So in the next couple of months, what we are going to get is more or less a stable short-term interest rate and maybe one more reserve requirement ratio cut. That's all. So next policy window, December.
Next policy window is December, Bo. Would it make sense, really, given what's happening in the property market, given the challenges faced broadly in that segment and also with regards to credit creation, that interest rates would be looked at, the LPR would be cut as well?
LPR might be cut 5 to 10 basis points for the rest of the year, but I do not expect the MLF cut for this year. I think that we are talking about the credit growth rate is still slowing down, and therefore we have not seen PBOC react strongly to this slower credit growth. I think that we need to wait for a couple of months for this PBOC to react. One thing to note is very important. At the moment, the GDP growth rate is running in line with trend growth. It was slowed down from the high level we have seen in the past quarters. I think PBOC will only react with the following two developments. Number one, if the growth rate, trend growth rate, or ongoing growth rate falls below 5%, or if we see corporate defaults, especially in the housing sector, as well as unemployment rate rising significantly. So only these two could drive PBOC to ease more quickly. Otherwise, we need to wait until that definitely economic data will get worse before it gets better.